And we start off with South Korea, where the country's finance ministry said it was ready to deploy unlimited liquidity into financial markets after President Yoon Suk-yeol lifted a martial law declaration which pushed the won to multi-year lows. This follows emergency talks between Finance Minister Choi Sang-mok and Bank of Korea Governor Ri Chang-yong, as well as the central bank's approval of measures to stabilize the local credit market. The government confirmed that all financial markets would operate as usual, with the Bank of Korea initiating special repo operations to support local institutions. Moreover, South Korea's finance minister has reassured the public that the government will take all necessary measures to ensure that economic and business activities are not disrupted by the rising political uncertainties. In a statement following an emergency meeting, the minister said that the government has established a 24-hour task force to monitor financial conditions. He said the country will ensure exports continue without disruption under the circumstances that were prompted by the short-lived martial law declared by the country's leader that led to political turmoil. And on another note, the Bank of Korea revealed that South Korea's official foreign reserves stood at a $415.4 billion at the end of November, reflecting a $300 million decline compared to the previous month. The central bank attributed the decrease to the stronger U.S. dollar, which reduced the dollar value of assets held in other currencies, despite increased operating income from foreign currency deposits. The reserves are composed of securities valued at $372.4 billion, along with deposits of $19.1 billion, SDRSs of $14.9 billion, gold reserves worth $4.8 billion, and an IMF position of $4.2 billion. South Korea's financial regulator has announced it is ready to deploy 10 trillion won in a stock market stabilization fund anytime. South Korea's foreign exchange authorities are suspected of selling U.S. dollars on the onshore market in efforts to limit declines in the Korean won. South Korea 10-year government bond yields snapped 13 days of declines and were last trading at a 2.720.